Please subscribe, like, and hit that notification bell. Thanks, guys.
Okay, first thing just to mention before we get into this is that we have a half price sale at nostalbadcharts.com. If you like what I'm about to show you, do visit the website, have a look around, see what you think, because if you join during November, you'll get membership for 50% for half price, and that will last forever. So if you stay with us just for 1 month because you think everything on the website is a load of garbage, or if you stay with us for a year or for 10 years because you love us so much, it makes no difference to the offer. You'll get half price membership, and that price is locked in. So your monthly membership fee that you pay each month will never go up ever. Or if you pay annually, the amount you pay every 12 months will never ever go up. So that's completely inflation beating. I don't quite know why we're doing it. Probably shooting ourselves in the foot. We may regret it in years to come, but there you go. That's the offer. Make the most of it if you want to. But
And let's go. It's live, Kevin. It's live.
Okay,
We're
Pat.
live. It's alive, Kevin.
What do we do next? What do we do? I'm panicking.
Hold on, it's not live. That it's not live because this is recorded and I'll have to upload it, so it's not live.
Oh, okay. Well, it's nearly live. We're going to put it out the next day or two, aren't we?
Yeah, it's close enough.
Close to being live.
All right. All right, guys. Guess what we have on today? We have Mr. Dale Pinkert. A true honor to have you on, Dale. I was on your show recently, and I think we just need more sessions to talk more about TA thoughts, roadmaps. Try to give edge to the people who are trying to play the markets right now. See what we see. So
Well,
hopefully
thanks
you'll
for
do us.
having me, guys. And
Yeah.
I do watch some of your videos, and I think I caught one where after the big move that we had up in gold and silver on Friday, you said that it's still noise until we get a year-end close on a lot of your technical work. So I'm going to get into whether it's noise or not. But, every once in a while, and I trade various instruments, I have more conviction in some than others at different times. And yesterday I was looking at the action in the S&Ps and looked like nothing but a retrace. We started to have the meltdown in crypto, the whole industry, as well as Bitcoin and Ethereum. And I was looking at Apple, and you guys have an Apple chart. And to me, this market looks vulnerable. There's an old Wall Street expression that the bears feast on Thanksgiving and the bulls feast on Christmas. So
Okay.
Thanksgiving's a few weeks away. I'm looking for some type of full-blown retest. I know we have CPI tomorrow. Maybe it'll come in hot, and we get one more high in yields, but this could also be a failing rally. So anyway, the way I look at this is if I'm right, and we're talking about 5 to 8% back down, and there should be some pretty good fear down here. I want to see what happens first of all with the dollar on risk off. And to me, the dollar, and you guys know I've been looking for a top for a while, and I've been trading the short side of it. But to me, this looks corrective. It's a market that is reducing its overbought position that it's in time rather than price. Now, if we get a friendly number, we could see 108 in the Dixie. But this has been bothering me. It bothered me when I was, selling rallies, and I faded the Fed last week. But this still bothers me because if you follow my work, I say that that markets rarely peak when both momentum and price are confirming, which is what the dollar did on the daily TF. So now that we've worked off some of this overbought condition here on the RSI, and if we do trade down to 108 at new highs, I think we'll have the momentum divergences that you need to be able to call a top in the dollar. And you really aren't going to be able to call a top in the dollar until we take out this 104 level, which I wanted to show you how important it is. The monthly shows it. So it was pretty close to, this was the COVID high, right? 104.01. And then it tried to fail against it, looked like it would, finally broke out. And look at what it retested here before the acceleration of new highs. That low's 104.27. So the whole bull case in dollar is down to this level. Okay. I guess people will be buying the break. It's a highly sponsored trade. People still like it. But I think that before we get down here, that we're going to make a new high. Even on the monthly, we're confirming. On the weekly, I'm pretty sure. Well, we did have some divergence, so we're going to have weekly divergence for sure. And I think there's a chance between now and year end that we see new highs in the dollar. So for for those that are celebrating the breakout that we have in precious metals, and I can't argue with it. We came out of this falling wedge here, but now you don't have to risk the lows anymore. If you like gold, we should not close back under the 1680 pivot. So I was wondering what you guys thought about yesterday's action, and was follow through. It just hesitated for a day after Friday, and we had the huge day yesterday. Are you convinced? Because there were other times I was convinced in silver, like here, I was convinced we were breaking out, we're on our way. Even back here, I thought we had a bottom. So I'm just wondering if between here and 2170, as long as we don't close over 22, I don't know if I'd get FOMO up here on this breakout, especially with what I think may happen in the dollar. This will be a great test for gold. If the dollar does rally to new highs and gold is ignoring it, you have to be all in. I'm half in now, but I think I'm going to have another opportunity, and I'm going to time it. Should I get this one last blast to the upside in the Dixie up towards 116 is what I'm looking for.
Yeah, I mean, until Dale, until gold makes that breakout versus the SPX, any rallies in the precious metals sector, gold and silver, are a little unsafe and a little insecure. We've got the gold to silver ratio, which has broken down, so silver is now leading gold, and that's a bullish indication, of course. And you want silver to lead.
Right.
It tends to do that very often during bullish, particularly bullish phases in the precious metals bull markets. But of course, looking back at the 2000 to 2011 run, the gold to silver ratio was not always heading down. There were times when the gold to silver ratio actually went up as the complex moved up. But
yeah,
yeah,
I'll go ahead. Well, Kevin, you know what? I discovered it on this when we were getting this break in gold. We had a break in silver, or it was maybe here when the gold silver ratio was heading down. I construed it as bullish directionally, and maybe all it is just another spread where something is overvalued or undervalued against something, and it's really not anything you could use for a directional signal.
No, and this is why you can never in technical analysis rely on one or two or even three charts. You need multiple confirmations. So the gold to silver ratio is one, but the gold to SPX is another, gold to NASDAQ, the gold to money supply, M2, the 10-year yield versus the 30-year yield. All of these ratio charts are pieces of evidence, and you need them to all come together to confirm that we are officially starting the massive move up that many of us are anticipating and expecting in the precious metal sector. But the starting pistol has not been fired yet, and until the starting pistol is fired and those confirmations come in from all of those charts that I mentioned and a few others, then any sort of rally up could just be, a false dawn. We've seen enough of these false dawns to realize that you've got to be very, very careful and nimble if you're playing on hourly or daily charts, or so those smaller timescale moves, you have to have your sell stops tight, you have to have your targets clearly identified and have the risk to reward clearly calculated to make sure that it's even worth attempting it. Because and this is a really important point, and you'll know this, Dale, what a lot of people have been saying to me on Twitter is, Kevin, why aren't you going into gold and silver stocks at the moment? Why aren't you buying silver? Why aren't you recommending getting into precious metals at the moment? And what a lot of people don't realize is that you can actually get in at a higher price point and still have an even better risk to reward ratio. You don't have to have fear of missing out. You can afford to wait for those breakout confirmations and still get the same 20 to 1 or 30 to 1 or 40 to 1 risk to rewards by actually entering at a higher price point, because you can put your sell stops more confidently at those tight levels, knowing that the gold to silver ratio is broken down, that the gold to SPX ratio is broken to the upside. You know that you've got your wind at your back, and fighting the markets is something I personally try to avoid. And I want to have the wind at my back. And what I mean by that is having all of those technical chart confirmations behind me. And if they're not, then the risk increases, of course.
Well, I used to really, in fact, I would cover it, Bob Seger's song "Against the Wind," and I've traded that way too. I'm all for tailwinds now, but looking for the most difficult trade, so that when you make the forecast and the trade works, um, you look like you really know what you're doing. But I have seen I I have seen Elliott interpretations, guys, where we could rally up to 1740, maybe even up to 1800, and this would be a wave 4. This is kind of an A, B, C for a 4, which would imply one more shot down. Now, I'll make a confession. When we were here, I was looking for the wedge. I was looking for some completion down here. I was looking for the washout before the China news. I held gold and silver miners, which I've come out of half yesterday. But this could still end up being a zone if we negate the breakout here at 1680. So I think we'll know in the next couple weeks. I look at what's happening today. Yields are soft, but the market has basically sold off with yields coming down 15 bips in the last couple days. So I have a lot of conviction in this in the rate environment here, that if this is not a failing rally, if we get a third drive up here, that we're near a very important peak in rates. Okay, and it could have started right from here. I was telling people that I thought we'd peak at 421 up here. I think we got to 424. So we're on our way to a potential reversal week. A hot number tomorrow ought to seal it.
That looks like suspiciously like a bull flag there in the making, doesn't it? But you can't second guess these, because they do occasionally break to the downside and leave you looking pretty foolish. But as far as something else to bear in mind, of course, for the precious metals sector, just going back to that briefly, is that gold has a 7 to 8.5 year cycle going all the way back to, of course, the early 1970s, and the 7 to 8.5 year cycle low. The window for that low opens right now and closes in early 2024. So we've got a period now of just over 12, 13, 14 months where gold can put in that's very important cyclical 7 to 8.5 year low. So that's another major piece of evidence. So what we're seeing now in the precious metals, sometime between now and that early 2024 period, is a major low. At least that's what history is telling us. So if that cycle is to repeat, then the reason we've seen this long 2-year drawdown is because we're just trending down and down and down towards that major cyclical low.
My guess would be this. Yes.
Can you put me that NEM chart again? Because that was is that a false breakdown?
Shakeout down here.
Yeah, right.
Yeah.
Can you put that on the monthly? How does that look like on the monthly? This Is that a wick? It must be starting to look like a wick. Yeah.
Oh, yeah.
Oh.
Now that's what you want to see at the bottom. You know, those major
Oh.
reversals. Yeah,
Yeah.
that's
And
exactly.
back towards
Yeah,
this wick.
yeah. It's
Yeah.
And
interesting we
I
didn't
think
get
the
that in
CO.
gold. Yeah,
Go ahead, Kevin.
yeah.
Go ahead.
I was just going to say, it is interesting we didn't get that huge wick down in gold. You know, it's not anywhere near as dramatic. It's like you, I was waiting for a major sort of spike low in gold, and
Well,
that's not.
Well, you know what could happen here is that we could get one more washout in gold,
Mm,
and what would be more constructive and would be a change in how it's been
mm,
would be for gold shares to begin to
yeah.
outperform the
Hmm.
bullion instead
Hmm.
of the other way around. So,
Yeah.
if we have a rally and Newmont, we get a follow through off this reversal, and it gets a 52, and gold washes one more time,
Mm,
we may not take out this low.
mm,
wow.
In
Check.
fact, I was saying this
Yeah.
about silver, that if silver um, washed out one more time to take out that trade at 1680, 1710, that some of these silver shares would not make new lows, that they
mm,
may hold 280 or so, something like this,
Yeah.
and put in higher lows, especially something like this. So uh, this is definitely another piece of evidence you could put on top of
Yeah.
what's happening with the gold silver ratio.
mhm.
That's
So
how you forge bottoms, Dell. All these clues, your observations.
yeah,
That's how that's how you forge bottoms. My biggest hiccup for silver and gold. If you could put the silver chart, the futures on the monthly, I'll tell you when I'm gonna start getting excited because there is a wall, a definite wall. So if you zoom out on the monthly and you see that 20, just
two,
22, yeah, that I want to see a breakout and a retest from above, and then I'll get giddish. That for
oh,
me, like we're there now. All that zone from 22 to wherever we are now, it's a congestion area. That is crazy resistance right now. Because
yeah,
if you go back to 2013, the top had this fractal of this type of breakdown at 35. Like if you show us a 2011, 2013 top
okay,
on the monthly is great. Monthly is well, okay. Even here, you see there's a huge wall at 28, and that's why we weren't able to. So that fractal, we're in the same situation right now. Just like years later in 2021, we weren't able to get back above 28.
yeah,
Now on an
great eye,
analog, but more condensed, we have to get above 22. If we get back above 22, definitely the market's telling us something, Dell, that now the dips maybe should be bought. Gold's
yeah,
probably going to be breaking out versus SPX by then. All the charts that you told us, the miners are probably, if they're outperforming the metals, wow, we're in heaven.
yeah.
If the miners outperforming the metals and silver can close above 22 and gold can break out versus SPX, I think that's a shift in a paradigm
That's
shift.
great. It's a great area. Okay, so yeah, a great line in the sand. I think everyone should put this horizontal pivot on their charts and just be patient.
Mhm.
Okay, if you're
Because you could
not a
get trapped
trader,
now. Yeah.
yeah, if you're not a trader, be patient and wait for silver to become true once it closes over the blue.
You heard it here
Uh,
first. You're a poet and you
uh,
didn't know it.
yeah, just call me Mr. Silver. Anyway, so yeah, that's a great look. What else is going to be important is when you may be talking about the dollar, but we're on the verge of some type of reversal month. In the end, we have an inside
Mm.
month here, and this is pretty negatively correlated to gold. When it's going up, this has been negative because it's meant higher yields, and higher yields are competition for metals. I kind of, even though the market believes it, I go, well, okay, yeah, you get 4% on a 10-year note, but gold and silver could rally 7% in a day. So you want to wait 10 years to get 4%?
Yeah.
Or you could have it in a month. What's 4% when it comes to the type of magnitude of moves that could be unfolding? So this too will be another important clue, yields and the yen, which are so tightly correlated. And the question is, are we topping here and we're going to break down? Or is there, again, confirmed highs on the daily? But if we made a new high, attempted to make a new high in the yen, and I don't think it will because it actually looks a little weaker to me than the dollar. But this could also create the last pullback in gold and silver if we're not going to turn good here. If we get one more rally up here in the yen and we get one more shot up in yields on a hot CPI tomorrow. So that's going to be, so we have a lot of testing to do. If the dollar's going to make one more new high, that's going to be an important test. We have the technical level of 22 and gold at 1720 has had a problem a few days. So I have some divergence here on the 4 hour. So I just wouldn't have FOMO right now.
Interesting.
And
I mean, of course, the DXY is made up of, well, it's a comparison
the
of
euro.
the US dollar to the euro. So the euro dollar pair is obviously one to keep a close eye on. And when you zoom out on the monthly on the euro dollar pair and look at the last few years, you can see, yeah, if you sort of zoom out even further than that, you can, yeah. So there you go. You got to, you could actually run that support line.
103,
There's a support
103
line
and
there
a half.
from the recent lows. I mean, the whole thing is a sort of a descending wedge, and
Okay.
so you know it's
I know I have all
interesting to
these.
see if that.
I have all this noise here, but I'm it's actually a reversal. Trying to reverse here
Yeah.
on the monthly, but people aren't going to embrace uh, a bottom in the euro until we close back over these levels,
all,
103, 3.5.
all of those lows join up. You can join up a support line running through all of those monthly candle lows, going back to 2000, back to whatever it was on there. So
Okay.
2005. You can start at 2005.
That's the quarterly chart, Kevin.
That's quarterly.
Yeah, this is quarterly now.
Yeah.
Yeah.
So again, on the
So,
quarterly chart, you can start at
so are you?
2005.
Do,
Pass through
do you
there.
think that the euro has bottomed, Kevin?
Well, it's hit a support line. That's
Okay.
that's the reason for sort of putting in the line that joins 2005 to now, and that's a support line that we've hit. So
I think the
it's
pound.
a local bottom, and I think
Yeah.
I suspect that we're going to see over the next 1, 2, 3 years a trend reversal, so that the euro gradually over time starts to gain traction against the US dollar. So therefore, what I'm saying is that the DXY would gradually begin to drop, but it's not something that's going to happen in a vertical line. It's just a gradual shift in overall trend.
Okay.
So what I'm saying is that the low that we're at the moment in the euro dollar pair, I don't think we're going to make a new low. I think we're just going to start putting in a series of higher lows.
Okay. And
in fact, we've already started to do that, of course.
Yeah. Look how many higher lows we have.
Yeah.
1, 2. I guess you could call this a higher low.
Yeah.
So yeah. I do think though that there is a possibility that there'll be more pressure in the euro, and I don't think the pound had more of the hallmarks of a bottom, the classic capitulation weekly reversal candle.
Our stupid politicians to thank for that.
Yeah, I'm waiting to buy the pound down around 108. So wave 2 correction, buy it at 108. I think is going to set up a pretty nice move to the upside, 125 or so. And Canada, which is energy sensitive, I think we could trade 32, but again, I think there is also a shot for another high in Canada above 140. And if you're a gold person or a China person, really the weakest rally has been in the Aussie.
Mm.
Okay, and that's your, copper, gold, anything heavy you drop on the foot. The pivot, we have two pivots now. Is the Fed going to pivot? And is China going to reopen? They're going to reopen. No, they're not going to reopen. So we have a couple of narratives going. One about China, one about the Fed. And if China doesn't reopen, I could see Aussie trading to new lows here,
Yeah.
maybe around 61 for maybe the buy of the decade. So that's something else that I'm being patient for. And the fact that I think that could happen tells me, not to go get short gold, but that I will have better levels to buy it at in the weeks ahead. And, may even be a test of some of the breakouts. But be aware, if we negate those breakouts, we will see 1600 being taken out and trade down towards 1570, 15 and a half. I think that's still a possibility.
Yeah, definitely. That's why, like you said, you don't necessarily want to short gold, but you have to understand that there is potential downside. And that's two different things that people have difficulty understanding. It's like, let's say you're looking at Bitcoin, let's say it was bouncing on support a few days ago, and people say, oh, it could go up. But
Yeah.
even entering a trade where it's already starting to turn down on the hard time frames, and then you think that you
That was
could
the
go
ugliest
long.
chart I've
Now
seen.
today it's like I talked to Kevin. I said it's like I said cryptos in hindsight they've been done a long time ago, just dwindling
Yeah.
momentum. They've been done like I think Kevin called it back at 35,000
Yeah.
or something like. They're done. It's they've been done
Yeah.
a long time and going even if they don't go down like let's say they stop going down that I don't know where at 1,500 or 10,000. It's done. There's no high reward versus risk at this stage because it's probably going to need time to heal. So even if it does bounce up to 25 or 35, it doesn't mean it was the correct play to get in at this, trying to catch a bounce, a dead count bounce. Not enrages me, but, and then people say, it went up. But what we want to play is a 6-8 year base that breaks out and off it goes, and then you buy the dips. But Bitcoin, it's the inverse. Like
Yeah. And
you
and
can't
you
catch
know,
a,
And the really sort of nail in the coffin of cryptos at the moment, Dale, is that if you do a ratio chart of Bitcoin to the Nasdaq, Bitcoin has been underperforming the Nasdaq for a year now. So anything that can't underperform something that's as dead as the Nasdaq, then I really don't understand why anybody would want to go anywhere near it. It broke down versus Nasdaq
yeah.
a long time ago, and it's just I just don't understand these crypto pumping accounts that keep saying, "Oh,
Okay.
we're going to 25,000." We're going to, this is the end of the bear market, and so many of these crypto pumping accounts have been saying for weeks and months now, this is the end of the bear market. The end is here. We're starting a new bull market. There's no evidence. You have to wait for the evidence, and that 10 to 12,000 target that myself and Pat set back in May when it broke down at 40,000. We called the breakdown at 40,000 and set the target down at 19,000 with a lower probability target of 10 to 12,000. And it seems pretty clear to us now that that lower probability target of 10 to 12,000 is pretty likely now, particularly with this latest breakdown. If we get the weekly confirmation below 18,000, then I think it's a done deal that we go down to 10 to 12,000. I can't see how it doesn't return back to those levels. And at that point, it's still not time to start going all in on cryptos, because just look at the history of crypto. It takes a year going sideways. You get a nice bounce up, then it comes back down again, then it goes up again, then it comes down again. And this what Pat's talking about, you need a base to build. You need an evidential base to tell you that this market is turning around. And given
Okay.
the fact that cryptos are just a tech stock, they haven't proven anything different. Crypto is just a play on tech, and if
Yeah.
Nasdaq is heading where we think it is, it could take a long time to recover.
Well, the implications of this outside of where to buy or what to do price wise, price sensitive wise, is the crypto world was really applauding the adoption by institutions. And it's a sword that cuts both ways. If you notice this spike here, the market turned south with that yesterday as well. Okay, we had this spike down here. Maybe you could see it better here. So this spike right here was Bitcoin breaking down all the noise. You can't feel comfortable keeping cash at a crypto broker. Um, that's a problem. And the institutions that adopted it own other asset classes.
Yeah.
So if they're getting margin calls or they're taking hits, it could create liquidation in other instruments besides
Mhm.
Bitcoin. I think that that's a big story, is that it's not just fringe people that were in Bitcoin 4 or 5 years ago. It's been adopted by institutions because they think they want to own it for an asset class, and it's taken down many funds over the last year or so. And during those takedowns, they have to blow out other things, including precious metals. So just and equities. So this breakdown in Bitcoin, and now we're getting followed through to the downside in the S&Ps. Here we are. Still think that there's going to be some pretty good downside left here, going into Thanksgiving. I wanted to talk about something besides precious metals for your viewers and your subscribers, and just another asset class that no one really talks about. And
Ooh.
it's
What's that?
grains
Yes.
and food,
Yes.
that the Fed has no control over. I noticed, Pat, you're on Palisades with Tom. I did an interview with Tom the other day, and the title was "The Fed Can't Print Food."
Yes. I watched that.
Okay, so they can't. Um, and the fundamentals, I don't like bull markets and grains because I know about the misery it's going to cause, especially developing markets that have to pay for them with a strong dollar when their currency is weak. But I look at some macro charts here in the wheat, and actually, I told people to buy it before we had, Putin backed out of the deal, and then he got back into the deal. But I'm looking to buy this break between here and 780, and just for risk management, I'll be wrong, under 1720. And when you look at the wheat, the fundamentals are so constructive. Their crops are going to be down 30% in Ukraine and Russia. That's about 30 tons. Last summer's heat in Europe and India shaved another 10 tons of grain. The last time we were in a situation like this, we had the Arab Spring. We have problems with transports, with rivers drying up, the Mississippi. Um, we have a big crop report coming out the 12th. I put out the crop report from Trading Places just so people are prepped for the crop report coming out the 12th. Do you guys remember that
Yeah.
scene in the movie?
Yeah. Well, I
Orange
just watched
juice.
it recently. Eddie Murphy and Dan Aykroyd. What a brilliant movie.
It was really something, wasn't it? I mean,
And Jamie
yeah,
Lee Curtis there. Woo.
yeah. It was really. I think everyone
Remember,
should
you're
watch
gonna
it.
have to watch that, Kevin. Trading Places, 1980s commodity funny
Yeah.
movie there with
It's great.
epic.
And you know what? I was on the floor, and that scene in the bathroom, although it's exaggerated, it wasn't that much different. Guys taking antacids and aspirins and who knows what else. But I would pay attention to the beans and the wheat. And there's even an old correlation. Well, I guess everything I talk about is old, right? But at the Board of Trade in the 70s, the Chicago Board of Trade, where they trade beans, and they used to have a futures contract in silver, and silver and the beans traded pretty much together. You'd have a strong day in silver, you'd have a strong day in beans. So look for a reattachment of that type of correlation between soybeans and silver. And I really think that this should be an asset class for people. And if you say you were a charity or a church or it doesn't matter. The UN always is feeding the hungry. Why not just go out and buy a futures contract of 5,000 bushels of wheat for 40 grand, take delivery, and hedge your food risk going into the future? Because we could revisit these levels. And when you look at the grains, they were going up way, way before the war.
Yes,
So, I
yes.
mean, way
Yeah, and
before the war, right?
yeah,
Good point
So,
there.
we can't blame any of this. You know,
no,
the wheels were
the
in
Fed
motion long
can't
before
make
the
it.
war broke out.
Yeah, the Fed can't make it rain. When we get a dollar low, it's going to lift grain price. Dollar high is going to lift grain prices, and I think this is a sleeper trade for everyone who is saying, well, I think I have enough physical or miners, and there are stocks associated with it. That's another problem. That fertilizer prices have not come down since the war began. So farmers are using less fertilizer, meaning lower yields. I can't think of anything bearish in the fundamentals on the grain market, and I'm in an accumulation mode in wheat and beans. For now, the beans look a little better, but I still think there's going to be a big move in grain. So here you go. I mean, beans were, when I was trading in Chicago, they were 5.50, $6, but even here in uh, 2020, they were $8. And the chant on the
Wow.
CBOT was beans in the teens, beans in the teens. And we have achieved that a few cycles ago. We've had a couple of these cycles. Another positive is there's La Nina out there in the ocean, which generally brings in cold, dry, and I know we're in a mega drought here in the West, but that could spread into the grain belt in the US. And then you have all the political instability with the other producers in South America, like Brazil for soybeans and Argentina for wheat. So to me, it looks like we're going to get a breakout and take out these highs in beans. I've heard targets as high as 25, $30 in the beans.
Can you do me a favor, Dell, and pop up the WZ chart, the wheat futures? Because if my memory is fine, there's with the futures, we'll see data going all the way back to the just WZ, I think, wheat
This
or
is
start.
it?
No, WZ, and just let it pop up or click on the
WZ,
WZ, yeah, American. No, or back it up then, just W. And futures, if you click on futures, what's the no ZW, the wheat futures, right? ZW. Oh, there,
ZW.
yeah, there, ZW.
good.
If you could pop up the next, yeah, the ZW
Sorry.
futures. Check that out, guys. And now zoom out, put it on the quarterly maybe. I just want to show the big picture. I can't help myself there to
You are such an astronomer.
and scroll
It's
out there with your mouse there. I want to see the 1970s if we get them in this. But how come it's moving sideways? If you scroll, can't you?
there's the 70s.
Yeah,
Why is
can you
it-
display all of it?
I don't
1970s to
know.
now.
I
Do you have a
don't.
scroll wheel? Do you have a scroll wheel on your mouse?
Click in the middle of the price action. Yes,
it,
yes.
that's it.
There you go.
Okay.
Look at that.
So
And
there's 71.
Fit everything. There you go, guys.
Oh God, I learned how to use something new on
Yeah. This
on
is what I
Trading
like.
View. All right,
And guys,
look at that.
we're hitting new plateaus. So if we look, so 1970s, the inflation period, it brought it
Yeah.
from 192 all the way to 500.
Yeah.
That became the ceiling. In
Yeah.
2006, we created a new ceiling. So that ceiling is now the floor. The 500 is the floor.
Yeah.
And
Yeah.
now we're probably going to have a new ceiling eventually above 1,000. If ever we're able to stay above 1,000, then that will be the new floor for wheat.
Well, it's incomplete. It's only got 2 drives. So you
Yes,
guys
it's going to
know what
need
I
a,
believe
a
in,
cup and
huh?
a handle or something to
Yeah. It may have to do some work between here and, $7,
yes.
but this is not a bearish chart. I don't think it's a double top and wheat's going to crash. So I think you have to use this as a buying opportunity this quarter that we're in. And I should put up beans, and so you could
Yes.
see that too.
Yes, please. So,
Okay, so
so
let's
beans
just
is going to
go.
be S or just, yeah, start, or yeah, if you tap soy, it should pop up. There, soy futures. There they are,
So I'm-
ZL, ZS. Wow, it looks better, this one. It looks even better
Yeah.
than wheat.
That's why I was saying even on the daily, the beans look better. So if you just take it from 8 to 18 as a rectangle, and you break out over 18, you get $28 beans.
Yeah,
What I was just saying a few minutes ago.
yeah, that's a good measure move. So these
Well,
big
I
bases,
tell you what, wasn't it great masterminding together like this?
love
Really
it.
nice. Huh?
Yeah, and just one more chart, Dale. If you
Dale,
can,
seriously, Dale, when I'm having conversations with Pat and we're sharing charts like this, by the time after about half an hour, my head's ready to explode.
because there's always another one, Dale, to look. Ah, but look, let's look at that. Let's look at that. And if I want to show the people's future for Bitcoin, pop up Canopy Growth, because I saw that in
Oh,
your
I
list.
like
I
it.
said, I just want to,
CGC.
yeah, I want to
I'm
show
long.
people what happens when a bubble busts.
All right. Well, I think we're getting yeah, there you
You
go.
see?
All right.
That's what happens when a bubble busts, guys.
Yeah. Wow. And
Because,
I mean, this was mainly people on the IPO that got rich,
yeah,
right? They
in
bought the
Canada,
IPO. Yeah.
yeah, they
Yeah.
legalized
So
the day they
it,
legalized it. That's when it crashed.
look, all of them. So I'm following them now because I think they're going to pass the SAFE Act in the U.S. So I think there's going to be a play.
Okay.
But I'm not going to get long anything until there's some important cycles in the market due late November, early December. I'll see I love when I, have a period where I'm going to be right about, and I could still be wrong, but if I am right about this decline, I use this time period for separating the wheat from the chaff and see what really holds up and shows relative strength with a headwind, knowing that when the headwind turns into a tailwind, they will lead the parade.
So divergence. You're looking for divergence.
Relative strength.
Yes, relative strength.
Yeah.
Well, that's
Which
what a
is
lot. Yeah.
I was going to say,
Sorry,
which
Kevin.
is basically what we sort of do with our ratio charts,
Yeah.
looking at relative strength of one sector versus another. And if your sector of interest isn't beating, other sectors, then you have to ask yourself why you're in that particular sector, whether it's precious metals or pot stocks or cryptocurrencies. Unless you're shorting, of course. But if your ratio chart is clearly showing that one thing is outperforming the other, then you know where to be focusing your attention. That relative strength is really important.
Yeah. So
Important
those are my thoughts. Those are my calls. The next one's yours.
point.
800-899 bear. I used to
Well,
have that. I used to have that for an 800 number. So I would do a radio show, and the tagline at the end was, "Those are my calls. The next one is yours. 800-899 bear."
Nice. Yeah, the talk show. I didn't know that.
I used to be. I would do radio spots, and
Yeah.
I was even on CNBC a few times, man.
You have a good voice though for all this stuff there. It fits.
Yeah. Well, thanks.
Yeah.
You
Nice
haven't heard me
bassy
sing,
voice.
but I really I learned from you guys today, like usual.
Yeah.
well, it's great.
It's team
It's great to
effort.
hear. Yeah, it's like I
So
was saying. It's like I was saying on social media today. Rather than finding fault with the way, everyone does their work slightly differently, rather than finding fault, add something useful to the conversation. This is where social media very often, you get sort of disillusioned because people just attack. They're ready to try and attack, and they're trying to look smart, and they're trying to knock people down, and instead of doing that, we can learn stuff together. Most people have got something useful to add to the conversation. Even if it's just to sort of, give some compliment or whatever. I don't like the way that people sometimes are just very quick to criticize and quick to find fault. It's not,
Okay, well,
it's not
here's
the way
my,
to do
let
it.
me coach you on that, Kevin. Shake the dust off your feet. Haters are only rooting for others to fail to rationalize their own inadequacies.
Yeah, yeah, yeah.
So,
That's our thought for the day.
yeah.
All
So
right.
don't just count your pips, count your blessings. I think it's a blessing that I'm glad our paths crossed on Twitter, Kevin and Pat, and enjoy always collaborating with you and talking markets with you.
Dale, you can't leave without telling everybody where to follow you. So please.
Oh, okay. Well, I do. There is a room called TradeGateHub.com. It's free. We're not upselling subscriptions. It's sponsored by TradeView Markets, a broker. It's his way of just having a place for traders to come. You could always open an account at TradeView, but there's no pressure to sell. And also, you could catch me where I interviewed Patrick and Kevin on Face, which is also a free webinar through Forex Analytics at 8:30 a.m. And most of my streaming on TradeGate Hub is at 9:30 a.m. EST.
Beautiful. And yeah, the Forex Stop Hunter on Twitter, you could follow there, right?
Yeah, yeah. Forex Stop Hunter. And every once in a while, when I'm doing interviews, I turn into Forex Guest Hunter. Where are there's only 2 minutes because we do it live there. Anyway, so
True.
you guys, I'm proud to call you my trading warrior brothers.
All right.
Keep up the great work you do for people out there, trying to keep them whole so they could be there for what's going to be a major paradigm shift.
That's right. Thanks, Dale.
Okay. You're welcome,
100%.
guys.
Cheers for now.
Adios.
Cheers, Dale.
Cheers, Kevin.
Please subscribe, like, and hit that notification bell. Thanks, guys.